Welcome to the second part of 2018 NCA paper. Remember, this is with 5 credits. In this recording, we're going to do the income statement and balance sheet. So we've done the hard part, which is the first section, which is classifying and putting the adjustments in. In this section, we're going to do the income statement and balance sheet. Look, if you get sick of my voice, what you might want to do is put some music on and do it along with me that way. Remember, you're doing it on paper. You're not doing it on the computer. Unfortunately, because the computer you'll see is much faster. Key things to note is in the income statement, they give us the cost, gym cost, administrative expenses, and finance costs. And it also tells us not to use abbreviations. If we use abbreviations, we won't get the mark. Great. Remember to press pause if I'm going too fast so you can catch up. So the first thing we're going to do is the income statement. So in the income statement, we're going to do, basically that's the income minus expenses, and the idea is to get a profit for the year at the end of it. So we're just going to type income, and there's only one lot of income, and that's that one. That's the major amount for this business. Workout works, and we'll put the figure in. As well as income, we have other income, and there are 2 of those. And because they're together, you remember we can fill down. And we'll bring in both of those figures. Don't worry too much about the columns. But it is important that the main figures are in that last column. So just add those 2 together and we'll get a total income. So that's the total amount of money coming in or earned by the business. Remember, income statement is income less expenses. And the first one we were told, just check, it told us gym costs, administrative expenses, finance cost. So the first one, type in your gym costs, and I've underlined those. Tells me it's a heading. And we're just going to grab all those things that are gym costs. Fitness instructor advertising first. Fitness instructor wages. Gym rent or gym cleaning. Quite lucky in this one that we don't have a cost of goods sold. Fixtures and fittings are not. Gym rent. Again, remember you've done all the hard work beforehand. Gym supplies used. Other gym expenses. And then we go down to the 2 depreciations. Pretty useful, these 2, because they give us merit grades. I think that's right. Advertising, fitness instructor wages, cleaning, rent, supplies used, gym expenses. Good, that looks all good. And because we've done it on a laptop and referenced it, we can scroll across. If you're doing it on paper, you'll need to write all of those in. And then we're going to add them up. So we'll just auto sum those. Of course, you'll remember to bring your calculator to the exam, not your phone. And then we've got administrative expenses. Remember, really important that you write it out in full, otherwise you'll lose marks. These are all our AEs over here, starting with office expenses, office salaries, stationery, telephone and internet. And lastly, don't forget that depreciation. Note these ones will go in the first column with the totals in the second. Just keeps things tidy. And we got told finance costs was our last one. Don't forget to underline that. And as we know, there's only one finance cost, and that's interest. Because it's a total, there's only one, we can put the figure in that column. So if we add up all our expenses, and the income minus the expense is called profit for the year. Doesn't look that high. It's only $11,000. I'm sure they're disappointed with that small amount of profit. Right, so income statement done. Hopefully that's worth an E8. On to the next section, we do the balance sheet or the financial position. For this one here, I'm just going to hide at this stage. That so we can, so that we can get at all the figures. Remember, we do the property, plant and equipment part first. So we've been given this in the question. You'll see that's pretty blank. Again, pretty blank. So this is what we get in the question. So I've put it in here as well. So we've got depreciation. Three key things we've got. The historical cost. You might get that right just by putting cost. Accumulated depreciation. And carrying value. Great. So we just find the cost from the left-hand side. Exercise equipment. The gym fixtures and fittings. And the office. That first one's quite good because the exercise equipment, we bought some all one, so that'll be an excellent mark for us. The accumulated depreciation for the exercise equipment. For the gym and for the office equipment. Again, useful on computer because we can use formulas. The cost minus accumulated depreciation is the carrying amount, and we'll fill that across. And we might just auto sum here as well. All that to get this figure here, which will come over to the balance sheet. Over here, you may as well get these two achieved grades as well. Depreciation is calculated on a straight line basis using the following rates. So again, to the question, actually, we're after the resource sheet. That one. And it tells us here. So depreciation on exercise equipment, $5,400 a year. That's what we write. Thank you for an achieved mark. Next one, depreciation on gym fittings and fixtures, 12%. And the last one was a complicated one. Depreciation on office equipment based on a useful life of 10 years, residual value of 700. It's really important that we get those three easy achieved marks, those 1, 2, 3. Cool. Then we go to the financial position. We're going to start with our current assets. Remember, this is assets less liabilities. Gives us our owner's equity. The assets are, there are three types. Well, a couple, current and non-current. So current assets, we've done the hard work again. Anything that says CA over here. So we've got first one, gym supplies on hand. Second one, petty cash, that's cash sitting in a till somewhere. Prepayments and accounts receivable, not many. If we're doing a cost of goods sold one, you'd have to look for the closing inventory as well and fill that across. Good, so that's achieved, merit mark, excellence mark. And we'll get a total current assets. our non-current assets. There's also a heading, and there's three types. First one's the hardest one. Careful not to abbreviate here. And that's just a heading for notice I put note 1 because that links to here, note 1. And we're just going to, because it's a total, put that figure in. Our next one is intangible assets. We find we've got an intangible assets over here. So intangible assets are assets we can't touch. Goodwill. And again, because there's one, straight to the second column. If there was more than one, we'd do the 2 here and put the total across. The last one we have is investment assets. There's a lot of marks here. Well, actually not a lot of marks for quite a bit of work, but we've got to go through the process anyway. And just those shares and body fix. So in the end we'll have total assets. Heading up all your current and non-current. So you can auto sum. And that's the value of what we own. Then we take off the value of what we owe. Again, these are divided into 2 sections. Current liabilities, and we'll click on those we can find. See here's the first one. Taking up more money in the bank than we had in there. GST, owe that to the IRD. And there are 3 here. A lot of marks in here. That one there will give you a couple of excellence, and these ones either merit or excellence. So some good marks we've just got in the total. So they're all current liabilities. Our non-current liabilities. Normally they only have one of these, either mortgage or in this case loan. And because there's only one, we can put it straight into that second column. And our total liabilities. Just our current plus our non-current. To remember what we write here, it's equal to all our assets minus all our liabilities. Called, yep, you guessed it, net assets. Good. Now I'm going to double underline that because that's the figure we want it to balance to. I haven't done this question before, so I'm hoping it balances. Otherwise I'll have to re-record this, I imagine. Alright, last part, owner's equity. That's equal to your capital at the start. Over here, owner's equity. Plus profit for the year. Less drawings. And our ending capital. So our opening capital is easy to start with. We just find that figure there. Our profit, gonna have to find it from back here. Oh. From that one.